Hey, Storage Rebels, how is it going? I am checking in with you today to expand on a video I've done in the past. I've talked about analyzing a market around a particular storage investment to determine supply and demand, whether or not the market is oversaturated, undersaturated, or in equilibrium. And clearly, undersaturated markets are going to pose much better opportunity for us as investors than a equilibrium or oversaturated market because if there's more than enough storage in the area to serve the population, then we're going to be fighting an uphill battle to get filled up. And so it's not always a deal breaker, and these numbers I'm going to talk about are general rules of thumb, and certainly there are exceptions to these rules and valid reasons to adjust. But again, this is a starting point for you. In the past, we looked at calculating the supply and demand, and we talked about, generally speaking, using a 7 to 8 square foot per person demand projection. So, for example, if your market has 1,000 people, which is a very small market, you're going to anticipate a need for 7 to 8,000 square foot of storage. And then the question becomes, well, how big is the market? How do you determine who's included in your count of the population? And what we looked at was in primary markets, urban metropolitan areas, high density areas where there's plenty of storage around. Folks aren't going to drive past one facility to get to another one unless they're incentivized to do so pretty heavily. So generally speaking, in those highly dense city properties, we're looking at about a 1 mile radius, sometimes 1 to 2 mile radius. As you expand out into suburbia, you're going to be in a 2, 3, and 4 mile radius. And then in rural locations, you're going to be at 5, 6, and 7 mile radius. Generally speaking, I cap my analysis in a 5 mile radius. And if people come from the 6 or 7 miles away, that's just icing on the cake. But I like to be conservative in my assessments. So, like I said, we've covered some of that in a previous video. In this video, I want to discuss with you one particular nuance that I think is a stumbling block for some folks, and I want to make sure that it's clear. So what I'm going to do is, if I can get to the right page, and hopefully you can see that, we're looking at a property here. It's Tifton Self-Storage right here. And this is the 3 mile radius. This is a relatively medium-sized market, and so 3 miles is a good starting point for our assessment. And these other properties inside the 3 mile radius, shown by the circle there, a couple of them are not actually storage facilities. They just pop up because they're moving companies and they might have a little bit of storage. But generally speaking, if you do the math like I've taught you in the past video, where we're going to take the population in this area, which is roughly 23,000 people, let's call it just 20,000 for easy math here. We've got 20,000 people in this area, and we're going to use a projected demand of 8 square foot per person. That means this market could support and should support roughly 160,000 square foot of self-storage. And if you do the math, our property, Tifton Self-Storage, which we're in the process of buying, has about 12,000 square feet. New River Self-Storage has about 12,000 square feet. And then one of these guys, Hutchinson Moving and Storage, has like a couple thousand, call it 3,000 square feet. So these other guys are not actually storage locations, so they're not real competition. So we've got 3 properties in this 3 mile radius, and they total, let's round up and call it 30,000 square foot of storage. That means on first glance, this is a home run. There's no way we can't buy this Tifton Self-Storage, do a little bit of marketing, and we should fill up within months. It's about 56% full right now. And if you stop your assessment there, you would have really high expectations for this property. Here's the catch, though. Right beyond this 3 mile radius, at like less than 3.5 miles, we've got 1, 2, 3, 4, and then one about 4.5 miles away, these storage facilities. And these are all very large locations with 40 to 80,000 square feet each. And if you can imagine here, let's take this top one. If I pretended to draw a 3 mile radius, it would look something like this, right? Around this property. And so you can see clearly that my 3 mile radius overlaps their 3 mile radius, which means a portion of their square footage should be allocated to my market, right? These people in here can choose. They can either drive a mile and a half to me or a mile and a half to them. And this is the most densely populated area. So again, we've got to make some assumptions. What I do in instances like this is I determine a percentage of these competitors that I want to count on as being competitive against me. So if we look at how the circle would overlap, it wouldn't quite be half. But again, there's more population in this area, as you can see from the streets in the city, and this becomes more rural out here. So I'm going to say that half of this property's 80,000 square foot of storage actually is competition to me. So we're going to add 40,000. And then down here, we're going to do the same thing, add 20,000 because it's a 40,000 square foot facility. And same thing here. And when we do the math and we incorporate a percentage of each of these properties as competition against us, the supply-demand ratio the supply of L becomes 130,000 square feet of storage. If you remember, we said that this 3 mile or this area should support 160,000 square foot. And so we're still favorable, but it's a whole lot more realistic, and it's a different picture, right? 130,000 is a whole lot closer to equilibrium than 30,000. And so that's kind of that next level of assessment you want to do when you're really diving into a property and completing your due diligence. You want to know exactly where you stand going in, and this is one of the things we did to do it. We can go even further, and then we can compare like this mini self-storage. We could do a 3 mile radius around that and assess it properly, because if the 3 mile radius around, say, this one over here is it only overlaps slightly with our radius around our property, and if that's fully if this property and the population around it are in alignment with one another, meaning that this property alone can serve that radius, then the folks that are in the overlapping area aren't going to be, I'm not as likely to lose them as customers. Whereas if this one's out here, it's full, but there's ways to tell how much draw this property will have into our radius. If there's nobody living out here and this property's full, then it stands to reason that most of those people have to come from in here. So we want to look at the pricing there and seeing if they're kind of in a price war to steal competition from these closer properties and that sort of thing. So it does get a little cumbersome, and this is one of the reasons why I love suburban and rural locations. You can see even in this relatively suburban location where there's only 6 or 7 storage facilities total, this assessment goes from a very simple square foot per person within a radius, and very quickly it becomes a little cumbersome with overlapping markets and looking at the distribution of the population and who's geographically in a more favorable geographic location, and it becomes cumbersome pretty quickly when you get into more densely populated urban and metropolitan markets. This analysis becomes exponentially more complicated, and so it's just one of the reasons that I like to be out in suburbia and more rural properties. But hopefully that gives you a little insight into kind of the next level of analysis that we put into these properties before we buy them. If you have any questions, please feel free to comment below. I'm going to see what I can do to quickly get back here so that I can sign off and say that once again, if you have any questions or comments, pop those in below. I am perfectly happy to respond and answer any questions that you all have. Aside from that, we will see you guys next time. Have a great one.